This week, we are going to talk about the things that are on the top of the mind of the bankers, which is risk management, and how fintechs can play a very critical role in better mapping the risk management and helping bankers prepare for a recession.
What is the state of risk management today in your view?
In my view, there are two different things that are going on. One is the old traditional way of doing risk management, which I think banks have done a good job in the last 10 years after the recession. At the same point of time, I think the biggest risk that they are also having is that a lot of their risk management techniques have got decoupled from the current economy. So what I really mean is that a lot of the people, businesses have gone digital. They think digital, but a lot of the banks and their risk management still thinks in a very analog manner. So the biggest change in this space is that the data sets which typically risk managers have been used to using, like credit bureau data and trade line data, is becoming less relevant, and transactional data is becoming more relevant as a leading indicator. So while banks are really wedded to the old ways of doing credit assessment and risk management, looking at credit bureaus, trade lines, fintechs like us are looking to harness a lot of new set of data, including transactional data, cash flow data, data around their behavior, data around how they over time uh, take access or get access to credit, and then how they behave, use of funds, and all that kind of stuff. And that is a very powerful change that is starting to happen.
Where does risk management need to go next?
I think this is a very interesting time for risk management. So at one level, there's an explosion in data. There's explosion in tools that can be used to harness and understand that data. At the same point of time, things are changing in a very dramatic manner. So typically, a risk manager used to come from very strong credit background, but no technology or digital background. In this day and age, actually, you need risk managers who have both. So the role of the risk managers and their responsibilities are increasing. What is also starting to happen is that you will see a broader set of customers with more needs, but at the same point of time with higher expectations.
So you spoke about technology a lot. What are the new technology solutions in risk management that banks need to be preparing for right now or already are starting to acquire?
I would say the most critical technology is your brain. Again, it's like you have to be open minded. I think that's the key today. I think no technology will help you if you're not open minded. The key, again, there is that you cannot have everything in house. You can't build every technology in house. I think the biggest mindset change has to come that as a risk manager, I am part of an ecosystem. How do I harness partnerships with fintechs, with other technology companies? Like Apple Pay and Goldman is a great example of how they really converge their strengths, and now they are changing their landscape, and that's changing pretty quick.
In this environment of risk management, where is fintech coming into play today?
So the key areas where fintechs are playing a very good role now is that in onboarding, KYC, KYB, very smooth, ongoing monitoring, even looking at every piece of transactional data, trade line data, marrying them, triangulating them, and also looking for leading indicators, and even something as simple as filing the right kind of liens, monitoring them. So that's where fintechs are playing a very good role, and that's where technology can be a big boon for banks also. My take is that the safest way for risk managers today is to build collaborative ecosystem with fintech players and technology players and ensure that there's a mutual success for everybody in that ecosystem.